Hello, master's level students at Immaculata's EDL 680 on financial sustainability in Catholic schools. This in week 5, we're going to tackle the variance analysis, another very key and important document that you as an administrator are going to need to successfully manage the finances of your school. So the variance analysis is quite literally what it says. It analyzes variance or change, what's up, what's down. According to what? Well, according to your budget. So last week we discussed the budget, which is a full year plan of all income and all expenses. Once that's set, we don't change the budget. It's set. Once the budget is set, it does not change. That's a very key point. Why? Because what we are going to do is run a variance analysis. So for instance, if you say that you're going to spend $100 on paper for the year, and you end up spending $200 on paper for the year, your variance analysis is going to say you have overspent or you have an unfavorable variance on the expense item of paper. So does it mean that game's over? No, it just means that you're $100 behind the game. And so one of two things can happen. You can look to make up for that $100 somewhere else in your budget by either increasing the income or decreasing other expenses by $100 to get that to balance out. Or if it's just going to be a loss, you're just going to have to say, well, we lost that. We didn't budget correctly for the paper. But knowing that we had to spend $200 on paper this year, next year, we're going to be able to change that and make a proper budget for $200 for next year. So what this is, it's analogous to that of a baseball game. So this is directly from the president of the Foundation for Catholic Education, who would often give this analogy. Mr. Jerry Parsons is a big mentor of mine and has taught me a lot of this stuff. But imagine the variance analysis as a 12-inning baseball game. Well, if you're behind by 1-0, 2-0 after the first inning, nobody's crying. Nobody's leaving the stands yet because we know we're still in the game. As you get to the 6th, 7th inning, if you're behind by 6 runs, then you start to get a bit nervous, right? And so what this does is it helps to track your performance month over month against your budget to see how is your budget performing. Now, the earlier you can catch unfavorable variances, the better, because it gives you time to be able to adjust and to right size those. So this is key because this is not a one and done document. This is once a month at least, right? Once a month at least, that you want to look at a variance analysis to say, well, I made a budget for 12 months. How am I doing month by month? What am I over on? What am I under on? And what kind of adjustments can I make to get back into line with budget if need be? So in this, you're going to be reading from the SPAT book, Chapter 7, as well as slides 57 through 71 of the PowerPoint. A lot of very more specific and good information is there about the variance analysis. And the discussion question has to do with what challenges might you have with getting this, because you as an administrator are not a CPA, you're not an accountant, so you have to rely typically on others to be able to create this type of report for you. The most important thing for you to understand is how to interpret, read, and make decisions based on what the data is telling you. So good luck with the variance analysis. Again, as always, if you have questions, issues, problems, give me a call, give me a text, or shoot me an email, and let's have a conversation. All right, take care. God bless.